You're watching a special edition of the Global Business Report. I'm Rotus coming to you from Nigeria's commercial capital in Lagos. We're going to bring you up to speed with business and financial stories as well as recommendations for the unprecedented fall in global oil prices. Do not go away. As global economies respond with fiscal measures to COVID-19, there is a growing worry that the wealth disparity between developed and developing nations will lead to an uneven response and unsatisfactory results. Joining me to discuss this as well as the macroeconomic headwinds facing Nigeria is the CEO of Financial Derivatives Company Limited and a member of Nigeria's Economic Advisory Council to President Buhari, Mr. Bismarck Rewane. Good morning, sir. Welcome to the Global Business Report. There's an article in Bloomberg this morning titled, quote, "When $8 trillion in global fiscal stimulus isn't enough." I wanted to ask you if you share in the worries with a number of analysts, including IMF analysts, that say that the difference in wealth between advanced economies and developing economies renders the fight against the COVID-19 pandemic uneven and therefore not as effective.
Yes, I agree. But basically, the way you have to look at it is that what buffers did you have prior to this pandemic? Obviously, the developing countries and emerging markets had thinner buffers, one. Two, they had lower resistance than the major countries. However, you need to discount that with the amount of debt. Many of those countries, the emerging markets and developing economies had debt to GDP ratios averaging over 70 to 80%, while the advanced economies had debt to GDP ratios in excess of 100%. Therefore, in terms of leverage, those countries, the advanced economies, were more vulnerable to deleveraging than the smaller economies. But having said that, the buffers they had, if you took the composite of economic indicators, the buffers that the advanced economies had are much, much stronger and more robust than those of the smaller economies. In any case, this is an unfair world where, like we say, if you don't have, you can't get, and if you don't get, you can't have.
Thank you for that, sir. And before I go to my next question, I just wanted to quickly follow up on that. You mentioned the debt of emerging market economies and the difference. Prime Minister of Ethiopia, Mr. Abiy Ahmed, he's called for debt relief on behalf of emerging economies. That is what they owe developed economies. He's called for debt relief with respect to COVID-19 to try and help them to continue this fight on the fiscal side. Do you think that's a possible avenue that developed economies would be willing to forgive some debt for emerging market economies?
I think you took the words out of my mouth. There's a big difference between debt relief and debt forgiveness. Debt forgiveness is a write-off. Debt relief is postponement of or extension of moratorium. What we are seeing today is a postponement of payments that are due in 2020, and you will make those payments in 2021 or spread over a number of years. There is not yet debt forgiveness. To qualify for debt forgiveness, we have what they call the High Peak Initiative. That is the highly indebted poor country initiative. To qualify for that, the debt you have, you will pay down some, and then there will be a write-off. But that's the kind of Paris Club cum Washington Consensus arrangement. It doesn't apply to everybody, and you cannot invoke that for all countries. So for now, what countries are really emphasizing is, please, don't forgive us on our debt. Just postpone the payment of our interest and principal so that in 2020 and 2021, we don't have to pay any of this. And those monies will be used essentially to take care of the poor and the vulnerable within those countries. That is what you're seeing.
Thank you for that, sir. I want to ask you what you make of this quote from a Singaporean economist. This is back to the unevenness of the fight against COVID-19 between developed and developing economies. He says here, fiscal bazookas are the norm in more advanced economies, while emerging market governments don't have the kind of ammunition and fiscal space. Their fiscal packages are more water pistols than bazookas. Is that a harsh take, or is that a reality of what we're seeing?
Well, that's the reality. The difference, you see, the income per capita of a country like Switzerland, income per capita of a country like Denmark, the income per capita of Singapore itself is something, many of those countries have seen income per capita of over $70,000, $80,000, in some cases about $50,000 or $60,000. The average income per capita in Africa is almost about $1,000. So you can see the difference. One set of countries have 40 times more income than the other. And so those guys who have 40 times more are the ones that have the bazookas, and they can actually recoil and use their resources and their reserves to withstand the shocks. While those countries who are living on the day-to-day basis, like African countries, and in particular countries like Nigeria, have to resort to 1, borrowing, 2, aid, and 3, debt relief. But in all cases, because this is a global phenomenon, the debt relief and maybe to some extent debt forgiveness will have to be applied. But I'd like to make a point that there's too much emphasis on COVID. There was a world before COVID-19. There will be a world after COVID-19. The focus now is that we have to fast forward and say, post-COVID-19, where will the world be, and how are you going to position yourself to recover and make sure that you are part of that U curve and turn your U curve into a V curve recovery? If not, wherever there are a lot of people that will not survive what we can call the Fourth World War, which is the biological warfare World War. There was the First World War, which was a military war. Second World War, which was a military war. The Third World War was a cyber war, which is basically a .com war using social media and technology. But the Fourth World War, which is a biological warfare, is one that we have no defenses for, and there are no alliances to deal with that, and that's where we are. So post the biological warfare, where are African countries going to be? Post the biological warfare and the fallout of the economic problems that arise from this, where will Nigeria be, and how are we going to be comparatively advantageous and competitively well positioned? That's the question.
Very pertinent questions there, so thank you for that. I want to take us to oil now. President Trump sent out a tweet yesterday, which has caught a few people off guard. He threatened to instruct the U.S. Navy to shoot down sink Iranian gunboats if they threaten U.S. ships out at sea. It caused a slight rally in oil prices, but that was earlier this morning. WTI was still at just under $15. Brent crude earlier this morning was just at around $20 a barrel. Is this our new normal for oil prices?
Well, let me put it this way. Donald Trump is facing the most difficult situation in his political calculations. He never thought. 3 months ago, all he was talking about was how he was going to be reelected based on the post-impeachment bump which he had in approval ratings. He never knew that this is what was going to come. Like they say, what you see is what you get, but what you don't see is what gets you. And that's what has happened to this virus, caught him unawares. Right now, he's using everything possible to ensure that he can deflect attention from where he is. He knows that low oil prices used to be good for the United States, but nobody's driving, nobody's flying, so nobody's benefiting from the low oil prices in the U.S. The U.S. unemployment claims have exceeded 22 million people. Unemployment rate has exceeded 5% already. Inflation is jumping, and they're printing money, there's no room. The same things across the world. So, trying to deflect with the Iranian issue is not going to push up oil prices, because people have discounted that. Inside that price of $15 or $20 is built in the political risk premium, and that has been taken into consideration. What we are seeing now is the fact that what was the projection of the Western world many years ago, what we call the obsolescence of oil and the irrelevance of OPEC, now it's gone a bit too far. And I see our projections that oil comes back in the second and third quarter comes back to about $34, $35 a barrel, and that will stay. But at $34, $35 a barrel, when our production in Nigeria is going to be at about 1.3, I think our quota is now 1.4, we have to go further. Then we have a big revenue and fiscal shock. And that's, going beyond that, how will Nigeria survive in that post-shock environment? That is, we go to second quarter of 2021. After everything has settled and everybody's beginning to recover based on its own trajectory and momentum. Where will Nigeria and what should Nigeria do? That is the key question I think we need to address in the next few minutes.
Exactly. Thank you for that. In fact, I was actually going to get there to how Nigeria reacts to this. You were on Arise News on the morning show a week ago. At that time, oil prices were at Brent crude was at the $30 per barrel level. And in just a space of a week, here you are today, and now it's fallen to 20. You've just said that you're expecting oil prices to probably recover in the second or third quarter. But as far as the impact on the revenue picture, should Nigeria sit and wait with regards to when they recover, or should there be another adjustment to the budget levels with regards to where oil prices are?
No, I don't think there's a need to, because if you are going to be adjusting every day after when the market, these are short-term phenomena, moves, the markets are volatile, commodity prices are that way. What you know, you build into your reserves and shocks. What you do is that we have a scenario of $30 a barrel, 1.7. We've cut that down to 1.5. Basically, what you normally would do is to defer some of those projects, but that's only the government element. Inside of the national income equation, there's consumption, there's private investment, and there are net exports. To deal with the net exports, Nigeria has to actually adopt a much more pragmatic and realistic exchange rate mechanism and method. So that's something that the central bank is going to take care of. To deal with consumption, there's the petrol price rebate, and that will probably go lower before it begins to recover. To deal with investment, there needs to be packages. It's not, I'm not talking about palliatives. There's a big difference between packages and palliatives. The packages are things that you invest in and gives you a multiplier. Palliatives are consumption that goes nowhere. So that's just to take care of the weak and vulnerable. But after all is said and done, you can only take care of the weak and vulnerable with the resources you have. Nigeria, at this point in time, is under-resourced and therefore has limited capacity to actually give out palliatives. And don't forget, what is consumed is not saved. What is not saved is not invested. And that's where we are. I would say we have to deal with the structural problems at the same time as we are dealing with the operational problems. The structural problems have no quick fixes. There are no quick fixes, Rotus. The point is that we have to take those structural decisions, including pricing of petroleum products, the foreign exchange market reform, trade and investment reform, adopting the African Continental Free Trade Agreement, accepting the single airline, that is the Open Skies Agreement within Africa, and also begin to shift this economy from a wealth-produced economy to a productive sector economy. In other words, dealing with productivity.
Thank you for that, and we appreciate you laying out, which you've done, extensive now for a number of years, laying out the solutions that we need to face. I wanted to ask you something about stagflation. On the morning show yesterday, I was speaking with Leila and Dr. Abati about COVID-19 possibly pushing Nigeria into an era of stagflation. And Dr. Abati did mention that back in 2019, late 2019, when you're on one of your appearances on Arise News on the morning show, you spoke about stagflation. And I want to ask you if so some have argued that Nigeria is already there with reference to stagflation, or are we heading there? What's your take?
So, first and foremost, stagflation is defined as a situation where you have high inflation, slow growth, and high unemployment. Nigeria has been there, but the level of stagflation we have now is more alarming than it was in 2019. Because what has happened in 2020 is that we have had a deterioration in our external position, which has exacerbated and made the situation worse. So stagflation is worse than if you go from stagflation into a depression. That is the worst outcome. So to forestall that, and that is why you are seeing that the federal government of Nigeria is taking the bull by the horns in terms of addressing some of those structural problems. If you do not have new investments, if you don't have job-elastic sectors being addressed fully, you are not going to get out of the stagflation situation you are in. The last time the world faced stagflation was in 1974-70, when the price of oil quadrupled, and even countries like Britain had 3-day working week, high unemployment, high interest rates, and everything. Well, it's a very, very difficult situation. We have low stagflation right now, and it will be difficult, and we just have to take the bull by the horns, and I think that's.
Thank you, sir, and thank you for defining it for us, and also mentioning inflation. I wanted to ask about that because year-on-year figures for March release is up at 12.26%, a 6 basis point increase from February. How do you see inflation playing out for the rest of this year? Do you think it could go higher, or with where things are as far as the macroeconomic picture is concerned?
Don't be deceived. 12.26 is the figure for March. The lockdown started on March 31st. Okay?
Yes, sir.
So the compression and the economic paralysis that the economy faced, unprecedented, took place in April. In April, the price of flour in March, baking flour, was 10,500. Today it is 12,700. The price of beans, the price of gari, even Indomie noodles have gone up by 500 naira. Now, so the food basket is essentially almost 48% of the composite basket for inflation. So expect inflation figures for April to 2.5% to 15%. The year-end projections, according to the EIU, is 19%. If you have inflation rates that have gone up to about 18, 19%, and you have interest rates of 2%, then you are in trouble. You've got to do something about your interest rate regime. So, but what can the central bank do? If all of us in the world now go to your people and say, no, we have to address this fundamental thing. We have to bridge our inflation and interest rate so that investors will have a real rate of return. That is a big quagmire that we are in. So we have to accept inflation. But let me make a point. Inflation is a function of income. There's been panic. And now when the money is finished, the people that are on daily wages, when the money is finished in March and April and May, then the prices begin to decline. The airlines will have not worked, they have not paid salaries. The hotels, the restaurants, all these guys have not paid salaries. All of those guys will have no money. The palliatives are not enough to cover for the income they've lost. Therefore, we see that, well, there'll be a spike in prices, but then come May, June, you begin to see prices taper off. But one condition, there's something else. The exchange rate, if the exchange rate adjustment continues, today in the parallel market, people are talking about 417, 430. If it continues, imported inflation and pass-through effect on prices will be there. So whilst on one hand, people have no money to buy, on the other hand, the import content of what they're buying will increase. Hand sanitizers have gone up by over 400%. So you will find that these things, the adjustment in the exchange imported products will be there. So as far as inflation is concerned, 12.26% was historical. What you're going to find in April is about 15%. Year-end is about 19%. But then it begins to come down because people have no income. And post-COVID-19, we will be in a high inflation environment, but growth will begin to increase at that time and bring inflation down by second quarter of 2021.
Thank you for that, sir. Thank you. Very in-depth there. Also moving now from inflation to GDP. Our Q1 GDP, 2020 GDP figures, what we're expecting. Q4 2019, we came out at 2.5%. So that's the fourth quarter of 2019. If you factor in, I guess, the impact of COVID-19, how much of a pullback are you expecting, if any, for Q1 and maybe subsequently Q2 as well?
In Q1, what we are seeing, there was the border closure effect. There was a VAT effect, there was the adjustment, and there was already a slowdown. So when you compare Q1 2020 to Q1 2019, when there was an election, you will find that the slowdown was there. We think that you might go from, instead of 2.55, which you got in Q4 2019, you'll be down to about slightly about 1% in Q1. But very quickly after, you will have that drop to minus 2.5% in Q2, which is where we are, minus 2.5 to minus 3. The downside that we've seen, the IMF says minus 3.45. We are hearing that it could go as far as minus 4 to minus 5% at the end of the year, because the level of industrial contraction we have seen, the level of compression of activities that we've seen, suggests that it will take a long time for us to recover fully, and therefore, on the downside, we should be looking at minus 4 to minus 5%, and on the upside, maybe minus 2 to minus 3%. But in all cases, Nigeria is already in a recession, and the recession will extend, in our judgment, to the second quarter of 2021.
Thank you for that, sir. In fact, that was exactly my next question for you. Some have suggested perhaps 2022. The IMF has said 2021. So as far as your outlook at financial derivatives, you're looking at 2021 Q2.
Absolutely.
Okay.
2020, because the U curve, it will come down and then we'll begin to flatline in the second quarter of 2021. And then we'll begin to see recovery, mild recovery. And because we've taken some of those structural decisions, i.e. petroleum pricing, exchange rate adjustment, trade policy, opening up the market for some reform, we would then, Nigeria will probably get a V-shaped recovery, because the investors will be very interested in coming back into this market.
Fantastic. So okay, I was going to ask you about a possible depression, because some are combining the different challenges within inflation, unemployment, and so on and so forth. So you would say that anyone suggesting that this could actually go into a depression would be exaggerating things. That's not likely.
I think it's a potent risk, but if we continue what we are seeing now, and the government continues policy direction which is adopting, the Minister of Finance and National Planning is very clear in our mind as to what you want to do. The central bank is also coming along and is aligning itself with the fiscal policies. Investors will see the benefits in this, and when you put all of these things together, I think we'll have a V-shaped recovery, and I don't think there'll be a depression. I doubt it, because in a depression, in any case, we're all dead.
Very, very true, sir. Speaking of this central bank, they've joined forces with the private sector to form COVID-19, which is a coalition against COVID-19, building ICU centers, raise billions to feed disadvantaged Nigerians, and pretty much trying to do their best to unite the country with regards to how they can assist as far as the private sector is concerned. If we were to form a united front as a country, can we get through this, as part of what you've alluded to earlier?
No, I've gone beyond that. I'm already post-COVID-19. I'm assuming that all of these things and these palliatives and all of that, some of them are necessary. Some of it is also photo ops and sound bites. If you take the total amount put together as a percentage of our GDP, take the 3.5 trillion, take the 1 trillion, all of that put together is 4 trillion naira. The GDP of this country is 147 trillion naira. We are talking about 2% of GDP. It's not going to move the needle, but it's good for what they call rhetoric. It's good soundbite. It's good photo ops. It's good for TV and all that. But in terms of impact, you are not going to feel it. The number of people that are hungry, the number of people, the vulnerable, multidimensional poverty in this country has over 70 million people living in poverty. I don't think the TV shows are going to help. In any case, these guys can't even afford a TV. So I think we should go beyond that. So as far as I'm concerned, I've gone beyond COVID. I'm assuming that we will survive COVID. Our projections show that even with the standard correlation of 0.68, the total infections we'll have at worst will be 200,000 to 300,000, and the total fatalities we'll have at worst will be maybe 1,000 to 2,000 fatalities. Having said that, malaria kills 300,000 people a year in this country. Lesser fever kills more people. So I'm not trying to downplay COVID-19. If it's mismanaged, it can become a big problem. I think we can contain it, but right now, I'm assuming that all things equal, we'll get over that, and what we're going to do post-COVID-19 is more important. We should be looking at the future. Some people dealing with the present and the past, that's fine, I think, but the future is more important than anything else.
Thank you so much. So I only got just a minute to go. I want to quickly ask you about the lockdown, if you can. Do you think it will be extended? I understand there have been suggestions that it should, and the impact of it continuing.
Well, I don't know. If Nigeria has tested only 7,000 people, if you lock down for the next 1 month and you test, let us say you test 20,000 people in the country, and you're getting a fatality rate of around, say, 4 or 5%. That's nothing. Lagos has 18 million people at last count. So without testing, without, lockdown prevents communal, communal transmission. We now have to learn how to reopen up this economy and take the advantage of social distancing and build that capacity to test and treat people.
Thank you so much, Mr. Rewane. We've spoken to Mr. Bismarck Rewane, the CEO of Financial Derivatives Company and a member of the Economic Advisory Council. We appreciate your insights, sir.